Hi folks, welcome to the video. Today is a very interesting topic. The ninth red candle, historic move signal that you can't ignore. So what has happened in the last 9 days is that we've had nine red candles. This basically is a significant statistical occurrence because it doesn't happen easily, and it's a rarity actually. And so we decided to dig deeper and look at past data, how many times this has happened before and what was the outcome of the market post that, because this is signaling a very continuous kind of a selling pattern where you don't allow the market to even bounce for a day. Um, and and this is not really normal. So we decided to dig deeper, and we found that only 7 times in the history of 30 years of Nifty has this happened. A 9 day red candle streak, um, and it has never exceeded 9 days. So there has never been a case where the market has been in red for 10 days of red candles. A candle is basically showing you the first of all, it shows you that whether close is above the open or not. So like for instance, if we take the first candle, so open was higher and close was lower, and hence this is a red candle even though it is higher than the previous day. Okay. So a red candle basically means that the market pressure was so much that despite wherever the market opened, closing was lower than that. And so it has happened for 9 consecutive days that closing was lower than the open, and closing was also lower than the previous close on all these candles, except the first one, of course. So does this imply anything? Any impending crash is coming, or is it saying that there are very strong hands in the market now which are trying to control the market? So we will try to take a look at some data and see what happens. So the 9 day streak, uh, all the instances have been studied here, although there are not too many, but the 9 day streaks have resulted in an average loss of minus 7.3%. This time, when we had this 9 day thing, we lost about 3.3%. So it was very mild versus many other streaks where we lost even 16.7%. Now, what happens after the selling stops? So, selling has stopped today, and actually Nifty is up by nearly 0.9% today. So, the streak is has been broken. So, 1 week after the streak ends, on average, you will find that the market will go up. 1 to 3% kind of move on average. A month from the streak ending, you find on average the market is up probably in double digits or somewhere near that on average. In 3 months, you are also in, sort of average is double digit, mild double digit, but there are big instances of very large rallies. And then you can also look at 6 months, and you can also look at 12 months post that. And the relevance goes down of the streak once you start to move away from it. So the next 1 week is generally positive, as I showed you here, but not enough to cover the losses happened during the streak. Now, over a month, the 1 month has historically ranged from 6 to 26%, and 3 months have been mixed. 6 months after the end of such streaks have been quite good actually. 12 months return after such streak tends to show extremes, either strong positive or sharply negative, but higher probability of being positive. But the magical figure here is 24 months, where despite that streak, Nifty has gained from 13% to 24% from the end of this. Now, you may say that, 2 years later, what is the impact of that tweet or of that streak? Perhaps you may be right, but a 2 year CAGR from any point is not 13%. But when it comes from a point of weakness of 9 losing days, these are special situations which are causing this kind of a outcome. So it's not an anomaly; it is a pattern. It just wasn't a quirk of a 9 day data. We've analyzed the more common 7 and 8 day losing streaks also. So 9 day is the sort of the completely the tail case because there is no 10 day data, and there are plenty of 12 times of eight red candles and 22 times of 7 red candles also. So the 8 red candle data, again from first week period till 3 month period after the streak, they were mixed results. But from 6 month onwards, results have improved significantly in all streaks since 2015. And after 18 months, the returns have turned out to be even stronger, just like the first case. When we look at 7 day streaks, 7 day streaks have tended to be sharper with an average loss of 7%. But after 2015, because markets have not really, gone through any major bear cycles except the sharp COVID drop. So every streak has not only recovered its losses within 6 months, but also generated decent returns most of the times. Just like in earlier patterns, most of the time we see strong return generation during 18 to 24-month period, except during COVID, especially in streaks after 2015. So the key observation on looking at this data is that 9 day losing streak is a rarity in Nifty's history, and this is one of the mildest ever in terms of price decline. The short term rebound is very, very likely, but it is not guaranteed, of course. Today, of course, we have bounced. History shows that a first month bounce is common, but immediate recovery can be mixed. A 6 month horizon usually is positive. 6 months after this 9 day streak, the market always recovered and delivered positive return. So 6 months from now, March 2026, according to this data, and if we were to extrapolate this data, of course, you can always question that there is no guarantee of it. Uh, Markets will be positive from where we are. And long-term gains over 24 months returns have been positive 100% of the time, often generating excellent CAGR for patient investors. So 2 years from now, so October 27, you are likely to see 13 to 24% kind of CAGR from where we are sitting right now. That is the observation from this data. You can let us know in the comments how you like this data. Have you navigated these 9 days with frustration or not, and what have you done with your investing in this period? Have you been accumulating, or have you thrown away your positions? And then if you like such videos, you can watch this other video also on your screen. And do subscribe to our channel, and do like and share these videos. And I'll see you in the next one.